Lock it up.
Hi, I'm Brian Kuhn, and you're watching Your Future, Your Finances. Today we're talking with Mike Thomas of Lighthouse Insurance, an Erie insurance agency. Welcome, Mike.
Thank you for having me, Brian.
Sure. Thanks for coming on the show. So the importance of this segment is about protecting your family with insurance and other planning. Tell me a little bit about the business and your background.
Sure. I am born and raised here in Maryland, a native Marylander, which there don't seem to be a whole lot of those these days. I went to DeMatha Catholic High School and then on to stay local, went to Maryland, and I have a accounting degree from the University of Maryland. From there, after being a tax accountant for a little while, I got into the insurance business. Mm-hmm. Both my father and my father-in-law are insurance agents, so I guess it's in my blood to be in the insurance industry. And in 2000, I went ahead and branched out on my own to start Lighthouse Insurance. Mm-hmm. And 15 years later, we've got about 2,000 clients that we're trying to serve and protect their assets as best we can.
Mm-hmm. So somebody, let's say they're walking into this from the beginning and walk through the process of looking at their car and homeowners insurance. What are they looking for?
Sure. With a car, for example, the first thing they want to look at would be limits of liability. There's what the state requires, mm-hmm. and then there's what logistically or realistically someone should have. The state requires $30,000 of bodily injury coverage per person, $60,000 of bodily injury coverage per accident, and only $15,000 or $20,000 of property damage.
That doesn't sound like a lot.
With the average new car, mm-hmm. about $25,000 these days. Mm-hmm. You know, if you have an accident, you total two cars, even partially total two cars, it could easily get up over that $20,000 figure. Mm-hmm. And the medical payments at $30,000 per person these days, with a $60,000 max for the state. Yeah. It's a sue-happy world that we live in, yeah. And we're seeing more and more accidents resulting in more and more medical lawsuits. Mm-hmm. For that reason, in our agency, the minimum that we will do is $100,000 bodily injury per person, $300,000 per accident, and then we require $100,000 of property damage. Again, it's more to protect our clients, mm-hmm. and there's not really a big cost savings to do the state minimum, mm-hmm. and so for an extra $50, $60 a year, mm-hmm. to make sure that you're protected to meet your assets or protect your assets, it's a little more important to go that route from the auto side.
Yeah. Yeah, some of those numbers may seem foreign to people, but if they've ever been into an accident and gone through that experience, I'm sure they can relate. And then you were saying also insurance agents like yourself are actually getting into things like identity theft. Tell me about that.
Correct. And that's more on the homeowner side. When purchasing a home, or even if you have an existing home and adding that as an endorsement, identity theft is creeping up more and more in today's society. Mm-hmm. It seems we have to give our Social Security number, yeah. just about anybody on the street these days. If we're going to a doctor, mm-hmm. even if you're getting an insurance quote these days, if you're meeting with a financial planner, mm-hmm. a lot of times you're going to get that information. Your kids are given it. That's their ID number a lot of times at colleges these days. So mm-hmm. that information is out there. Mm-hmm. What the identity theft protection does is it will not only pay for what you're held liable for if someone does steal your identity. I think more important than that is it will help to restore your good name and restore your good credit. Mm-hmm. And a lot of people don't even know where to begin once that, when my identity is stolen, okay, now what do I do?
Right.
This is where this protection will step in and kind of put you on the path to getting everything rectified for you.
That's valuable. So the average consumer, I guess, may be watching this and they're saying, well, so that insurance is valuable, but the core, the homeowners insurance, that's all those commercials I see on TV. There's so many commercials out there. What do they really need? Like, do they always want the cheapest coverage? Is that always the best, or would there be a reason, like unique family circumstances, why they might not want the cheapest?
Great question, and there are some great commercials out there. Jake from State Farm is out there. Mayhem from Allstate is out there. Flo is out there. The elephant is out there, and the lizard, of course, with Geico is out there. And insurance isn't a commodity. Unfortunately, most policies look the same until you have a claim.
Right.
Once you have a claim, it's too late.
Yeah.
In some instances, the cheapest could be the best, but you really want to see an apples-to-apples quote to know what you're covered for versus what you're not covered for. And a lot of instances on the homeowners, for example, there's something called guaranteed replacement cost coverage, meaning if your home is insured for $300,000 by your insurance company, if it's destroyed in a fire and it costs $350,000 to rebuild your home, if you don't have guaranteed replacement cost coverage, that insurance company will stop at $300,000 and say, okay, Brian, get out your checkbook if you want to finish the house.
Yeah.
Guaranteed replacement cost fixes that issue, and it will be replaced to where it was before the accident.
Definitely some things to look into. And then other unique family circumstances, like maybe teenage children, new drivers, that would be something you want to double check with someone like yourself, I would bet, with the coverages.
Correct. Definitely, anytime you're adding a young driver, that tends to get the blood pressure up on mom and dad sometimes.
Yeah.
Even a way to talk about life insurance when that happens. But it's very important to make sure you have the coverage that you need. Again, we talked about lower limits or higher limits earlier in the segment, and kids, young drivers, are more likely to have an accident than if you and I are driving. They just can't anticipate like we can. So it's important to make sure they have the coverage that they need so that you're protected should one of your kids have an accident. Another way of protecting yourself, your assets, is something called an umbrella policy. And
let's hold right there. We're going to take a break.
Okay.
Umbrella policy is very important. We're talking with Mike Thomas of Lighthouse Insurance. We'll be right back. You're watching Your Future, Your Finances.